you believe the latest numbers from the U.S. Bureau of Labor Statistics, which in this case we do not, Tampa Bay is one of the nation's leading job-producing markets. But if that were true, Tampa Bay would be seeing much better housing demand than it actually is. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Tampa Bay update. The latest jobs report on Tampa Bay from the BLS is a stunner. They are showing that the metro is showing its hottest job growth in 8 years, with 41,700 jobs being added on an annual basis through Q3 2013. That would add up to an expansion rate of 3.6%, an incredibly strong number that ranks behind only Dallas among major markets over the past year. And that seems a bit hard to believe for us. Bear in mind the BLS does regularly revise its data, and we see this happen all the time, and sometimes those revisions are quite dramatic, and that could be the case here. But regardless, the overall trends do suggest that job growth is coming in at least decent levels. It's just a question of how strong those numbers actually are. So the trouble for the Tampa Bay's apartment market is likely not the current pace of job growth, but rather it's that much of the housing demand right now is going to rental single-family homes or to for-sale homes and condos as well. And with them capturing most of the total housing demand pie, the apartment market is still recovering at just a modest pace. Now this chart shows annual absorption by quarter, and you can see that after demand for apartments came storming back in 2010, apartment demand has really trickled off since then, aside from a little bump in parts 2012. And that correlates to what's happened in the shadow market of rental single-family homes and condos. That alternative rental product started flooding the market in 2011 as investors bought up distressed homes and put them back into the rental pool. And lots of institutional players in the mix here as well in Tampa. So this is one of the few markets where we've actually seen a net increase in the shadow market inventory of rental single-family homes and condos, and not just a trade-off between mom-and-pop owners and institutional owners. So as a result of all this, occupancy is not in bad shape at 94.6%, but the road to recovery has been a long one, and we still are below the pre-recession norms here. Tampa Bay wasn't able to get any occupancy growth at all in the seasonally strong Q3 period, and year-over-year occupancy was up just 50 basis points. Now, one reason apartment operators have been able to get the occupancy increases they've gotten here is that they're not pushing rents much. So after notching some nice rent growth in 2011, you can see that rent growth levels have really dropped off here as the pool of alternative rentals has expanded. As of Q3 2013, same-store rents for new leases in Tampa Bay were up just 2.1% year over year. And as if the shadow market competition wasn't enough, Tampa Bay apartment owners will face a new challenge in the next year, a big pickup in new apartment supply. Take a look at the construction numbers. Construction has totaled around 6,000 units the past couple of quarters, and once all of this is built, the apartment base will expand another 3.1%, putting Tampa Bay in the nation's top quintile by that measure, and that's not a great number for a market still wrestling with an overstock of total housing supply. So what does all that mean for the forecast ahead? Well, the shadow market competition isn't going away anytime soon, and now we have the supply to deal with. So NPF Research is forecasting an occupancy drop of 80 basis points over the next year, and we expect rent growth to come in around 2%. And that wraps us up for Tampa Bay. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.